The Federal Reserve is divided. 3 regional bank presidents voted against the last rate decision, a rare public split. Here's why that matters for your money in Morocco. On Wednesday, the Fed releases minutes from the July FOMC meeting. Investors are hungry for clues. The central bank has stopped giving clear forward guidance, leaving markets to guess. Why should a Moroccan care? The US dollar dominates global finance. When the Fed keeps rates high, the dollar strengthens. The Moroccan dirham is pegged to a basket of currencies, but it feels the pressure. A stronger dollar means more expensive imports, from fuel to machinery to electronics. That feeds into local inflation. For Moroccan businesses with dollar-denominated loans, the cost of servicing debt rises. For exporters, a weaker dirham can boost competitiveness. For investors, US rate decisions drive capital flows. Higher US yields attract money away from emerging markets, including Morocco. The dissent from 3 Fed presidents signals internal disagreement. Some want to hold rates steady, others want cuts. The minutes will reveal how deep the split runs. This uncertainty creates volatility, and volatility creates opportunity. Historically, dissents at the Fed are rare. The last time 3 presidents dissented was during the 2019 rate cut cycle. That period saw significant market volatility. The current split could be even more consequential, because inflation data is mixed. Some indicators show cooling, others show stickiness. For emerging markets like Morocco, this uncertainty is a double-edged sword. On one hand, a weaker dirham can attract foreign tourists and boost exports. On the other hand, it raises the cost of servicing foreign debt and importing essential goods. Consider a Moroccan importer of machinery from Europe. If the euro weakens against the dollar, but the dirham weakens more, the effective cost in dirhams could rise. Hedging with forward contracts can lock in a favorable rate. Many Moroccan banks offer these products. It's worth exploring. For startups seeking US venture capital, higher US rates mean investors demand higher returns. That could make fundraising harder. But it also means that startups with strong unit economics stand out. Focus on profitability over growth. The 10-year Treasury yield is approaching 5%, a level not seen since 2007. This raises borrowing costs globally, including for Moroccan corporations and the government. Higher yields attract capital away from emerging markets, putting pressure on the